All right. Good afternoon, team. Good afternoon. Good afternoon. Hope you're all having a wonderful Sunday. Hope you had an amazing weekend of rest and you're ready for this interesting week ahead of us. Let's start off with this week's major U.S. economic reports and Fed speakers. On Monday, we have Fed Governor Christopher Waller speaking, and then we have the U.S. leading economic indicators at 6 a.m., 10 a.m. For Eastern traders, and 6 a.m. for West Coast traders. On Tuesday, we have more Fed speakers. And then on Wednesday, this is where we get a key economic. This is the FOMC Fed minutes release, and this Fed minutes release simply releases the notes from the recent FOMC rate decision. So all of the dot plot and all that information will be released to the public. And the way that the market usually reacts to this event is the market will be choppy heading into Wednesday. And then depending on what the sentiment on the market is, the market ends up making a move as soon as the data is released. And from there, we do have a first on fake out, but then after that is when we get the real move. So if the fake out move is, let's say, a big rally, then maybe we should look for let's just see what happens. I don't want to make any predictions ahead of time, but just want to give you some experience on how this event usually turns out. Be careful. It's going to be a little bit choppy heading into Wednesday session. And then after the report, that's when the markets pretty much move and we get the real move in. So on Thursday, we have initial jobless claims. This is going to be very key. The market has been reacting to this one. And depending on what this data shows, even JP Morgan has been reacting to this one. We saw that they changed their outlook for recession odds based off of that data. So yeah, we saw sorry, not JPM. I'm so sorry. Goldman Sachs pretty much reduced their recession odds from 20% heading into next year to 25% to now 20%, and that's because of the jobs data that we got in the prior week. We also have these two data here that's also going to be key. But most importantly, this is the most important event for the entire week. As we can see here, there's a star on it. Thank you so much for attendees for sharing this with us. Fed Chair Powell is going to be speaking at the Jackson Hole event, and this usually has major impacts on the market. The last Jackson Hole event that I remember triggered a major market crash. And if we can go back here on the S&P 500, let's take a look. So the last one that I do remember was quite a long time ago. So I believe it was around when we were in the bear market. So that's why a lot of traders are nervous and they're expecting the market to behave in the same way. So this is when we had the Jackson Hole event, and on the April 21st, and that led to a major market crash. And I feel like maybe many traders are expecting that from the market. And sorry, no, this was it. Yeah, on August 26th, in 2022, this is what happened. We had a major market crash that was triggered by Jackson Hole, and that's why a lot of traders are nervous. But personally, seeing that it's taking place on Friday, I feel like this is a good thing. The reason why I believe this is a good thing is because usually the market is limited on Fridays, and there's not a lot of volatility. There's not a lot of how do I say, liquidity. So any liquidity that the market will get will be to pretty much get that Friday going and into the closing session. So I believe that the fact that it's on Friday, I think that's a good thing. That's a good thing for the markets. So it's going to be very interesting, team. It's going to be very interesting. The meeting starts at 6 a.m., which is pretty much 30 minutes before the market opens. So we should expect a lot of volatility heading into Friday's session. Now, do keep in mind, Wednesday, Wednesday, we're expecting the markets, even Tuesday. Tuesday, we may honestly see some pullbacks based off of these Fed speakers. Usually when we do have Fed speakers, the market tends to pull back. And heading into Wednesday, considering that we have the FOMC Fed minutes release, again, this is not Powell speaking, okay? This is just a notes release from the prior FOMC rate decision that we had. So was it July 31st, I believe? And that's basically what's going on. And yeah, Friday is going to be very key. All eyes on Friday for Jackson Hole. And now let's go take a look at the charts and see what's going on within the charts. Now here is the S&P 500. The S&P 500, believe it or not, team, is right back up like nothing happened. So we are right back up to where this is where the Amazon crash was. This was led by the Amazon, pretty much Amazon crash. This market crash was from Amazon, and this was the Japanese market crash that took us all the way down to 510, which was the prior level of support, just below the prior level of support. We came back up, held support really well, and we have been advancing ever since then, nonstop and not looking back. Now, this could, believe it or not, team, this could continue to go on, okay? This could really go on where we may retest all-time highs at 565. And what I expect to happen, I don't want to predict the market, okay, team? But usually when you see these this kind of behavior where the market just simply breaks all the resistance levels up ahead, let's say heading into Monday session tomorrow, if we break 554, you should expect the market to pretty much go on as much as it can until it feels it touches this gap right here at 564. Now there's a gap there at 564.84, and if we do fill that gap, that's where we can anticipate some market pullback down to these levels to form some sort of higher low structure. If bulls do get a higher low structure there, there's a great chance that we can get this rally-based rally, for another rally heading into rate cuts in the next 2 months. Now, why do I believe this can happen here? Because when we were up here, the market did not have a lot of liquidity to advance higher. However, now this time things are different, and we have a lot of liquidity down here that will be used. So all of the traders here, all of the hedge funds and pensions, whatever you can name, that were shorting around here, that basically got shaken out and then entered their short positions, will be getting whiplash now, meaning they're going to get burnt on the downside as well, and that is going to propel the move higher for the S&P to push higher and higher. Now, again, these are all predictions ahead of time, and we don't want to be predicting price ahead. We want to react. So to be really truthful to you, heading into this week, I'm pretty much neutral. If I see that bulls are showing strength above 554, I'm going to take advantage of the upside with continued bull strength, with all of that volume coming in, with continued bull strength to get that potential retest off of that 565 resistance level to get another retest there. Based off of my experience and what I have seen, this is usually the case where if you see the market has already come back up more than 70%, they're going to get that 30% up there too and get a retest at that level of resistance where we got big supply, so that bulls can absorb the supply there and feel how the supply is. And once we know and have a feel for the supply, then bulls can go on for a pullback, pretty much retesting this level around here, perhaps getting a higher low structure and then pushing back up. So to be very detailed with you, team, 537, okay? Below 537, you no longer want to be long, all right? If bulls come back down in any way, shape, or form, let's say they get any upside around here, or even if they fake out around, let's say 560, if we go down and we retest 537 and we hold support there with a nice bullish demand candle reaction, we're going to expect the markets to continue to hold with bulls showing up at the level of demand, at the demand zone right there, and then advancing back up towards 564 to get the third retest in at the level of resistance, then form a nice consolidation, and then push higher. Now, let's take a look at how the market looks, how the top tech look, and what can be propelling this market higher. All right, so let's go over financials first, okay? This is the financials. Financials have a major market weight within the S&P 500, as well as many other, as well as the Dow Jones, and a lot of the regional banks within the Russell 2000s IWM. So we can see that XLF had a beautiful retest at the bullish ascending breakout. We had a breakout, and then we went back down, firing that double top, came right back up, collected a lot of liquidity, and so far bulls are looking like they're pretty much in control and they're advancing higher. So for one way, the market can push higher through XLF, and one of the stocks that I'm watching for XLF's financials is JPM. So if there's anything that I'm going to trade, it's going to be JPM towards 217 target, okay? So eyes on JPM for a breakout above 217, and then even a continuation above 217 for a rally-based rally play out. All right, team. So JPM can be a good bullish trade heading into this week. All right, now let's take a look at what else has been propelling the markets higher, team. This is why we don't panic, okay? This is why you don't listen to others. If you attended my mentorship class where we talked about how traders, does anybody remember the psychology that we talked about with traders being afraid to pretty much buy positions when we were down at these levels at 190? Does anyone remember that? Remember, we talked about how the market psychology affects traders and how traders usually are very scared. First, they say, I cannot wait for the market crash, or I cannot wait for the market to pull back so I can buy the dip, right? And instead, the market doesn't just give them a dip, it gives them one of the greatest opportunities. And once the market comes down here, this is where everybody's scared and everybody's like, oh my God, the market could crash more, and everybody's panicking, and they're not able to. The market psychology, the way that it works is now nobody is really buying here, at least the scared ones, because they don't. They don't have the confidence to because of that market psychology. However, if you attended those sessions, we talked about that psychology specifically, and I believe we talked about it in the library as well. So you can find it here: current market analysis and strategy for buying long-term options known as leaps. This was posted on August 6th. So August 6th was just around here, right over here. So about the second day, on Tuesday, after the major market crash that we had from the Japanese market crash. So in that video, in that class, we talk about the psychology and all of the effects that traders have that prevents them to buy down there. So if you're one of those traders, make sure you watch that class and get a good understanding. So yeah, team, here is the XLK, the technology sector. Believe it or not, after the major market crash, that is already back up more than 50%. We're already above the supply zone, which is very, very interesting and very, very important. And so far, bulls are looking very strong. Okay, team? Bulls are looking very strong, and as long as we come back down and let's say we create some form of higher low structures, bulls will step in and continue to push higher to get a second retest at the level of resistance there inside of this bigger zone. So let's take a look at some of the stocks within the technology sector that are pushing this move higher. We got Microsoft, we got NVIDIA, Apple, AVGO, CRM, ADBE, AMD, Oracle, Cisco. Cisco just beat earnings. QCOM beat earnings. A lot of these stocks are looking great. MU is also looking greatly discounted. So let's take a look at some of those stocks that have really been showing strength here. This is Apple. Apple is known as the bellwether of the market. When Apple shows strength, that means the entire market usually is strong. And this is Apple. Apple fired its head and shoulders, went back down to that smart money zone, retesting the prior breakout level, showed significant strength. And so far, we are right back up, invalidating that head and shoulders, that bearish trend change formation. And we are back above the supply zone as well. So you can see over the last 2 weeks here, we have got nothing but buyers closing every single day green. So Apple so far very, very strong. And as long as Apple shows strength, we have a nice double bottom here. You can ignore this whole movement down here. This all, to me, is liquidity to further get more upside now that they have they have the momentum. So Apple also beat earnings, but came down from Amazon as well as the Japanese market crash. And yeah, so seeing Apple is showing strength, the overall market can remain stable around here. Let's take a look at Nvidia. Nvidia, absolutely impressive. I salute this stock. What a beautiful rally, smart money concept. Back down to the demand zone, printed a bullish demand candle, and so far it has been rocketing higher. This is why, team, as Chef Mike also stated, always look at your charts and ignore what everyone else is saying, okay? Ignore the news, ignore all of the other BS that you come across, and just pay attention to the charts, all right? Because what the charts usually tell us is the true sentiment of the buyers and the sellers, all right? It shows us the true sentiment of the supply and demand dynamics. All of, you know, a lot of people say, oh, technical analysis will be, or they say that news will over, you know, or trump technical analysis. I say, no kidding. Yeah, that's exactly what happens. And a lot of times what news ends up doing is pretty much moving in the direction of that price action. So when I say, team, when I say follow the true form of supply and demand dynamics, if it looks like a duck and walks like a duck, it's a duck. All right. So if we see a bullish demand candle reaction off of that demand zone where the breakout happened, then that's a bullish reaction right there. Okay, team. Just as our mentorship illustrations tell us. So this, if it quacks like a duck, it's a duck. But yeah, team, so far, this is NVIDIA, and I salute this stock because now we're back up in the uptrend. We have got the expansive move up there, and they even have the room to try and get any sort of pullback for further upside. I'm not saying that they will get that pullback, but we will see because we do have a gap ahead, and so far the market is showing strength, and I believe that the market does have some fuel to try and get a little bit more upside to fill some of these gaps here, as we can see on NVIDIA at 126. Once we fill the gap, we will see from there. We'll see how the market behaves. But team, so far, a very, very strong market. You got to give it to the market. And I really love seeing what I'm seeing with the market because now the bulls have the liquidity. We have we have the rate cut potential coming up, and the technology sector as well as the financials are showing a lot of strength. And usually, when those two are in sync, the market is very strong. The market will see a very strong bull market. So, if you were in any discords that had you very, very bearish in the last 2 weeks, I say reconsider reconsider where you're getting your news from because they are preventing you from catching some amazing opportunities. And believe it or not, team, NVIDIA was one, Amazon was another, MU was another. We caught all of these amazing stocks at the bottom. Even if we weren't so confident, we trusted our smart money. We trusted our strategies there. We caught MU. Rainbond caught MU at the very bottom down here at the smart money zone, and it has been going up. So absolutely beautiful. And the market so far looks good, okay? We may see some pullback, so don't be going too heavy on some of these technology stocks up here. We've been going up a good amount. Just wait for how the market reacts by the end of this week as well as next week when NVIDIA reports earnings, and we're going to go from there. All right, team? But just know there are some absolutely amazing opportunities that are forming on the long term, and we will take a look at it as well. I've been paying attention to a lot of small cap earnings, and most of them are beating earnings, which is now pretty much a checklist with just one last thing to go, and that's the rate cut. If we get a rate cut heading into September 19th, small caps, the Russell 2000 index is going to have some amazing upside for the next 2 years, and this is going to greatly benefit our traders that don't have the capital to be trading the bigger stocks within the technology sector and so forth. So small cap is all going to be your playground where you can absolutely bank from there, and I'm going to alert some amazing stocks. heading into the next 6 to 8 months, I'm going to be very active in the Discord. I'll be alerting many trade opportunities that I come across on the day trade as well as the swing trade alerts. And yeah, team, I'm very excited. So definitely keep an eye out. My goal from now is to get at least one day trade in, no matter what day we are in. No matter how bad the day is, get at least one day trade in for the team. Got to get a higher low. And yes, I agree. As Chef Mike said, team, we got to get a higher low. Okay, before we go too bullish up here, let's wait for that higher low, and then we are going to react. We are going to react to that higher low structure. All right. So, very well said, Chef Mike. Very well said. So again, got to get a higher low, and then so yeah, we can be a little bit more cautiously bullish once we get that higher low structure. Xiomec, yes. I didn't say anything about that in the announcement, but the 2K cash account, I'm going to be very active on. And the reason why is because I want to double that account so that I can grab opportunities such as DXCM, V, and I'll show some more opportunities where we can cut our losses at, let's say, 30% or so, and we can reap the benefits of anywhere between 50 to 100 to 150%. So I'm looking forward to being very active on the 2K cash account. I just didn't say anything about it because I have been doing nothing but broken promises to that wonderful team, and it is one of my favorite teams in the Discord and as well as our community. So I really don't want to disappoint anymore. Thank you so much, Didi. I really appreciate that. Thank you, sir. Thank you. So far we keep going up and only up. I'm like, can we get a healthy pullback? Bahar, we got one of the biggest one of the biggest opportunities, man. But yeah, team, let's take a look at some other stocks that are on my watch list. I'm watching DXCM. Now let's take a look at my analysis for DXCM. I also have a bullish momentum trade that I would like to share with you. DXCM is a medical device company, focuses on the design, development, and commercialization of continuous glucose monitoring, CGM, system in the United States and internationally. The company provides a system for use by people with diabetes as well as for use by healthcare providers. Its products include Descom G6, Descom G7, integrated CGM systems for diabetes management, and much more. My brother used to work for this company and said an overall positive view about the company. Matter of fact, here's an interesting story. I applied for DXCM. They interviewed me and they did not call me back. And that was a while back. So I did my research and I had to research the company in order to provide a good interview. But yeah, the stock recently dropped, and don't worry, team, trust me, it worked out for the absolute best. The stock recently dropped negative 30% from earnings, which I think also was amplified due to bad market conditions. I'm looking to buy long-term LEAP option expiring a year out for June 2025. Buying to open DXCM June 2025, 100 call at 530 premium or around this range this week, and planning to hold long-term for at least 2 to 5 months. The contract doesn't have a lot of open interest just yet. It has around 500 open interest, but it is still liquid enough for us to get in and out whenever we wish. So with 500 open interest, it's very easy for us to get in and out whenever we wish. Should start to see lots of open interest increase once the stock is back up above 80. I believe once we get back above 80, that's when institutions are and pretty much traders are going to add to that contract. Does that mean we short the? That was a while back, Christopher. Honestly, team, I do want to say this, okay? If this ever happens to you, and let's say you don't get a call back from a job that you really wanted to work at, just know the universe has much greater plans for you. And I swear to God, I can pretty much back this up with proof. Matter of fact, there was even another job that I applied for. There was a nonprofit job in San Diego that I applied for, 2-on-1 San Diego, and they also did not call me back. I later found out that they were only hiring ladies, and things ended up working out the best for me because that's when I applied for EDD, which was Employment Development Department, California Employment Development Department, and the job was so easy and so much less stressful than the other job. And that worked out for the best. So if that ever happens to you, please do keep in mind the universe has a plan for you. Do not feel sad. Just continue to move forward and try to be encouraged more than ever. All right. That's really great to hear, Terry. That's really awesome. Yes, sir. Everything happens for a reason, and please trust the process. If that happens to you, don't be too sad. So again, team, we will be buying this contract here for DXCM June 2025 call. I've been waiting for this setup to formulate for a while, and it's finally showing a good, promising setup where we can enter for that anticipated move back up. We have plenty of time. No hurries on this one. We will give it plenty of time, but we will know that over time, this is a steal here. This is a good trade for us. All right. So another trade that I have for you, another trade that I got for you is Visa. Visa stock recently reported positive earnings and now has a nice double bottom pattern forming on the daily, which can also be seen on the weekly chart with two lower wicks that signify strong demand reaction at the smart money demand zone retest. So let's take a look at that setup. This is V, and so far, this is the weekly chart. Oops, sorry, that's the monthly. Let's take a look at the weekly. This is the weekly chart. So this was a base rally setup. And if you have access to our mentorship class, we have studied this setup many times. This is a beautiful smart money concept where we come back down to the demand zone. And if we see reaction there, if we see demand reaction clearly followed by demand follow through, this is great. This means that the bulls are going to break out and then head back up towards 289. So let's read the rest of our analysis here. Anytime you see these lower wicks, team, this is a good thing. Okay. All right. So the reaction off of those wicks was followed by a nice green nice green candles back up on the weekly chart, showing a strong follow through from the bulls. So that lower wick there and that lower wick there, followed by these green candles, are very bullish. This is the weekly candle, and they pretty much showed strength for the entirety of the prior week that we were in. It is only a matter of time before we break out above the 20 EMA line here, as well as the big corrective downtrend that dates back all the way to the 289 all-time high resistance there. Once the bulls break that downtrend, they can resume the bigger uptrend as shown on the weekly chart and head back up towards 289 all-time highs, and very likely prepare for a breakout from there by creating some sort of digestion and then heading higher. I bought the V March 21st, 2025, 305 call at 5.15, which I plan to hold. This is a long-term swing trade where I'm going to add another contract in 2 weeks if we go sideways. Expecting V to break the downtrend line and see all-time highs, or very likely 280s by the end of this year, especially with lower rate cuts announced starting in September 19th from the FOMC rate decision. Lower rate cuts means more fees for Visa that well benefits the stock, using Warren Buffett's compounding metrics of increased transaction fees. So one of Warren Buffett's strategies is that collecting fees, companies that he likes to buy companies that collect fees and that basically compound to insane amounts. So V is one of them, and that's why he's holding such a large position on V. Yes, sir. If you can purchase the 300 call, I agree. That's also a great one, Dali. Yes, sir. Tara, I'm going to post that. I'm going to post that on our Discord stock option traders weekly watch list. I made this channel here, the priceactiontrader.com. I made this just for the mentorship program, and I was going to invite all of the mentorship students there so that there is no distraction. However, I have decided not to. We are going to remain in one Discord, and let's just remain there. But I will be much more active with my team and make sure that I take care of the mentorship students. Currently, it's rejected at 200 simple moving average. What time frame are you looking at, Mariapon? Are you looking at the daily time frame here? I wouldn't call that a rejection. Oh, you know what? It can be a rejection, okay? It can be a rejection, but hear me out, team. Another reason why I'm so bullish on V is because I have this strategy on the TTM squeeze, okay? Now, this strategy happens very rarely, but it's very, very powerful, all right? And let's take a look at what this strategy is. You basically have one TTM squeeze failure here, okay? What that means is that the trend goes up, but fails to create an uptrend, all right? And then it happens again right here. The trend goes up, but fails to create an uptrend. And then what happens is we get another one here that fails to create an uptrend. But then eventually the third one or the fourth one leads to the biggest squeeze operation we have seen. And I talked about this on Apple just before it happened right there. So you can quote me on that too. You can go back and find it too. We talked about this TTM squeeze here. We can take a look at Apple before the mother of all squeezes here. We saw the first fail right there. The second fail was right there. The third fail was right there. And the fourth one absolutely led to a rocket right higher from 164 all the way to 220s. So that's the trade for V. That's another signal for V that I'm liking on the daily chart. And I'm looking forward to it. So this is why team, that rejection is why I said if we go down, I'm going to add another contract. So if it goes down, I'll add another contract in 2 weeks if we go sideways and spend more time here. But overall, I think bulls are preparing for a large breakout considering lower rates economy. All right, so we talked about JPM as well. So JPM is a bullish momentum trade here, team. I'm liking JPM. I believe that it can break 217 here. I'll be watching that. Another stock that I will be watching for a bullish momentum trade is IP. So IP is also looking like a good bullish momentum trade here. Bulls have a lot of strength here, and I think this stock can see a breakout. Let's take a look. I had one more bullish momentum trade for you, ALL. ALL is this stock is a insurance company, and insurance companies are seeing so much bullishness on their stock, and this stock is breaking out above this level of resistance at 177, and it's very likely to see some interesting, Chef Mike, interesting. We'll take a look at that in a second as well. ALL, the way that I'm going to trade this breakout setup here is we're going to buy so ALL bullish momentum trade above 177 breakout of this resistance line at 177.09. Bulls have shown overwhelming strength and had an early breakout in the recent week. Likely to see more upside in the next 2 weeks with bulls advancing above 185. And I will be buying to open ALL 1018 185 call at 390 on Monday. Okay, team. My goal is if you can pick it up for 4.0, that's also fine. My goal is to hold this contract for a week or two for a nice potential gain when the stock advances towards our target above 185. So we can see the daily chart, the weekly chart has that fuel. And what that means is the stock has fuel on the weekly chart to advance higher. So that's why we are going with that expiration. We're giving ourselves time, but at the same time, the strike is not too far out at all for us to get that melt up operation, to get that breakout above 185, and then trigger a melt up operation above the 70%. So far, the setup looks good. Bulls have a rally-based rally, and I think we're going to get more upside heading into this week. All right, let's go to IP. So IP is looking great here. Bulls continue to step in, and same concept here. The TTM squeeze shows that we have fuel. We're at a level of resistance, and I believe this can break out. So the way that I will trade it is, let's see. Did I make an analysis for it? I didn't, but I was looking at the January 17, I believe. The contracts are very cheap. You can even trade, you can even honestly trade the October 18. You can trade the 47.50 call, currently trading at 1.8. You can also pick that contract up. What I loved about looking at this stock is that it has so much open interest. Even if you go to the Januaries, I was shocked to see so much open interest on this stock. So if you're one that loves to value time, um, and our strategy team, our strategy with options trading, and I hope many of you here also learn this strategy and take this into consideration. Um, Trade options the way that you trade a stock. Okay, so here's what I mean by that. No stock is going to ever give you an 100% return so fast in just a week or two. Okay, but with options trading, that's very, very possible, and you can do so with much longer expirations. The longer you go out with the expirations, the safer you're going to be. The reason why the safer you're going to be is because the longer term options will not lose. If you buy a short term option, even if, let's say, that stock gets affected by short-term market noise, you're going to lose out and pretty much lose all of your investment on that given option trade. However, if you give yourself time, that time value is going to be one of the trades, the part of your trade. Here's what I mean. For a lot of stocks, you can even trade the time value on them. What do I mean by that? What I mean by that is, yes, I understand time value will never come back. Okay, but what I mean by that is, like, let's say the stock, a given stock, has gone down by a lot, right? It has lost a lot of premiums, and what happens is the premium has been lost from time, and when the stock does end up coming back up, it's or even when it goes down, team. What I'm trying to say is it's going to be much more durable than the shorter term expirations, because 60% of the option value will be maintained because of the time. So not only will you be having a durable option, a durable trade, you're also, if you're right on your direction, if you're getting your stocks at a good source, with a good source, or you have a great strategy, and you've learned the markets, especially through our mentorship program, you're going to do an amazing job trading this way. Buy the long terms, and the worst case scenario, you lose about 50 to 60%. For example, on Lulu, we were down a major amount on our on Ulta. We were down over 70% on our contract, and we're pretty much back to close to our break even in just 2 days, believe it or not. Why? Because and keep in mind, team, we got into Ulta around here, like around May, and it's been about 3 months here of us just going down and going down and going down, and now we're back to break even in just 2 days. And we have so much potential upside from here. So that's what I mean. Always give yourself time. Even if you get caught lacking the way I did with Ulta, and let's say you become tunnel visioned or delusional about not cutting a certain position out, this is going to save you. Okay, this is going to give you a second chance, third chance, fourth chance, even fifth chance for it to eventually cut at a minimized loss, opposed to a total loss. All right, team. So that's another beauty about buying long-term options. So another strategy that I can help you with is, if there's a stock that's very expensive, forget that stock. Okay, forget that stock. You don't have to trade it. Just go trade the stocks that fit your criteria, that are cheap, but give you a lot of time, because your probabilities is going to be so much higher from there, opposed to buying a contract that is much more expensive and much more detrimental to your account size. I'm going to be very active in the upcoming months, and I will talk about these factors more and more and more, especially as we do more options trading classes on our mentorship, which is my plan heading into the upcoming months here. So yeah, team, make sure you're always buying long-term options and give yourself plenty of time. For example, take a look at Newmont. I drew that zone. I drew that rally-based rally. And let's say we entered right at this. So we had the beautiful expansion there. And let's say we entered at that candle right there, which was which was basically signaling the expansion from that potential breakout of resistance up there. So let me just adjust it a little bit. The resistance up there to get that expansion going. If you bought a long-term option, expiring in January, this stock is very cheap. So let's go back and take a look at the long-term options, okay, team? So let's say you bought the 50 call because you saw a potential breakout that was about to happen. So this is the daily chart here, and we can see this went from pretty much 2.0 all the way up to 4.0, and that's really, really good. Seeing an 100% return is really, really great. Okay, team, that's really great. And that's the kind of trades that you want to be taking. You can buy them cheap. You can give yourself plenty of time without having to go and buying something like Nvidia or something, or another stock that's much more expensive, that only gives you, if you buy something for 200, you would have to buy a weekly contract and very far away from the money because of how expensive they are. So that's what I mean. That's what I'm trying to get across for our team there. So yeah, team, for IP, this looks like a good trade, and you can take this trade on this night's breakout, either using the October 18 47.50 call, or you can do the January 17, 2025. You can buy the 47.50 call, which is just at the money strike that is about to go in the money and print those nice 100 to 150 to 200 percenters there. When we buy a contract very far away, we don't lose money because we don't pay rent. I've been reading Greeks. Okay, so Ernesto, you still do pay. Okay, you still are going to pay interest. All right, no matter what options you're buying. The expirations, so there are two major factors on options Greeks. Okay, two major factors that you can break them down into. The first one is the intrinsic value, which means the real value, and the second one is called extrinsic value, which is the time. All right, so the time value will always go to zero. All right, the time value by the end of the expiration, as we approach the expiration, is always going to go to zero. So let's say this option, 50% of it is because of time, right? So let's add in extrinsic value real quick. So if I add extrinsic value, this is going to tell me how much time of this option is worth. So the extrinsic value for this option, okay, this one is 320, and the price is 320. That's very odd. That means that okay. I get it now. So that means, team, that sorry, I was looking at it wrong. I was looking. Okay, no, actually, that's right. So this particular option there for the January 17, 2025, this holds pretty much all of its value is because of extrinsic value. All right, so check this out. The mark is currently trading at 3.20, and the extrinsic value, which is the time value, is 3.20. This means that particular option holds no intrinsic value. All right, so how does it gain intrinsic value? Let's take a look. You see how the option just above it, the 45 call, which is $2 in the money, this one is trading at 4.65, which is $465. What is the extrinsic value on that one? 2.57. All right, team? So that means as long as the price remains at $47, this particular option, if it doesn't do nothing until January 17, 2025, which is until pretty much until then, this option will only lose $257. Okay, team? So far understood? It's still going to hold over $200 in value because the rest of the value is real value. Intrinsic value means real value. So in this case, at the moment, the extrinsic value there, that's your time value. All right, that's your time value. So time value is very, very it's for out of the money options where you're trading these contracts the way you would trade a stock. It's going to do you very well. It's going to really be a great strategy. And I'll talk about it more and more and more in the upcoming futures. I don't want to take more time from Rain Bond as well as Roger, but yeah, this is why you can see, this is why the option on this one, the mark is 465 and the extrinsic is 257, opposed to the at the money strike or slightly out of the money, the 47.50. This one's trading at the mark is 320, which means the current price of the option is 320, and its extrinsic value is 320, which means it holds no time value. So when does it gain time value, team? The moment it goes 1 penny above 47.50, that's when it starts to gain intrinsic value. So team, you're going to ask me, right? You're going to ask me, hey, if extrinsic value always goes to zero, so you see this 320, this always goes to zero. Matter of fact, even this one right here, for the in the money, even for a contract that's in the money, team, it's still going to lose its value, extrinsic value. Now, where does the value come from? The value will come from intrinsic value. So the more the contract goes in the money, the more it makes up for that extrinsic value. And it's well worth it once it goes in the money. So definitely keep that in mind. We will study that more in the options trading course. But yeah, team, just wanted to do a little bit of explanation for our team asking. Sorry about that, asking for it. And now I do have two more stocks that I want to show you real quick. And I'm done for the night. We'll pass it to Rainbond there and see what Rainbond has for us. Now, DG has earnings on August 29th. However, there are many other consumer stocks that are reporting earnings. And this could really see some nice upside heading into this week in sympathy with Walmart beating earnings expectations. We can see Walmart went from 68 all the way to $74, and that's because it beat earnings there, okay? So oh, and here's another factor, okay, team? Here's another factor. The more your options go in the money, the less interest you pay, all right? So the closer your options get to the money and go in the money, the less theta you pay. Your theta becomes less and your time value increases. So that's another factor to keep in mind. So yeah, team, Walmart beat earnings, and this is triggering a lot of stocks such as DG. As we can see here, DG, once it breaks this downtrend, it's going to fly on this double bottom formation. It does have earnings on August 29th. However, we can trade the breakout of this one above 125 in anticipation of buyers showing up before earnings, expecting the same from this stock. Now, TGT is at this smart money concept, and believe it or not, team, bulls are really fighting. Okay, bulls are really fighting for this, and this is looking amazing. All right, this is looking amazing so far. So we're back down to that smart money demand zone. Bulls are showing strength, and if this stock does beat earnings on August 21st. Sorry, not August 21st. Yeah, August 21st. That's when the stock reports earnings pre-market. If they beat earnings, this is going to be an amazing opportunity for us to go long towards 164. For now, I'm going to take it easy until they report earnings. All right, so now let's go over SMCI. For those of you long-term investors with large accounts, you can, or even smaller accounts, or mid-sized accounts, you can start adding some SMCI shares, maybe a couple of shares. Start off with a couple of shares, and as the market goes down, or as SMCI goes down more, you can dollar average cost this stock. But I'm very bullish, and I strongly believe that this stock is about to regain 699 and absolutely rocket higher. So keep an eye out on this stock because it's looking very interesting on the weekly time frame. We have a bullish engulfing that can follow through with more upside towards 699. And if NVIDIA does report strong earnings, SMCI is going to break this downtrend and head back up towards the 1000s. The stock is very volatile, and I expect it to get very crazy once we get above this resistance level at 630 area. So definitely keep an eye out on SMCI. I think it's going to be a good one for the next month or so. For the next month or 2 months, we've already retested the downtrend, which means that we have already gotten the lower low, and now bulls are trying to get that lower high in, and it could push the stock all the way towards the 750s area. All right, team, that's about it for me. Thank you so much for taking your time and listening to me and considering my analysis. I'm going to now pass it to Rainbond, and let's see what Rainbond has for us. Thank you so much, Terry.
All right, so hi everyone, my name is Rain Bond, and I'll be going over my SPY analysis here as well as a few my weekly watch list as well. Um, Let me just make sure I share my screen. Hold on. All right, can you see my screen, team? Let me see. Awesome, okay. And thank you so much, Body, for such an amazing analysis and also educating our team as well. You're always so appreciated with that. Okay, so I'm just gonna go over quickly my analysis here on SPY. So I'm gonna go over the weekly time frame first. I'm gonna show you the chart here on the weekly time frame. So on July as well, mid-July or end of July, we had we had a sell-off from the peak of 458 level, and as you can see, we headed we basically had a nice correction from there towards October, and bulls basically started to step in, and we had pretty much a whole let me see, as 2 months of downtrend there or pullback on SPY. So I just want to show that one and also the weekly chart as well. So if we can see here on the weekly time frame, we had this consecutive of 3 week of red, and as you can see, we tested the 20 SMA line here on the weekly time frame. Bull stepped in there, and we had a nice prolonged uptrend from there, creating that new all-time high at 565.16. So now we are followed up with another 3 weeks of red, and a lot of people were likely was bearish on this, as some of the traders I know was basically analyzing this chart as this was a 3 black rows, which is basically a bearish reversal pattern. But yeah, so as you can see, buyers stepped in here, and I had my uptrend line charted pretty much as like this. Let's see. So yeah, it was pretty much like this. My uptrend line was like charted like that with this support right here, and now we are finally as bull stepped in here. We are finally getting back above the previous lower trend line support that bulls established from this low right here of the 20 SMA line on April. So I don't want to confuse everyone, but I just wanted to show you that one. And I'm gonna go over now my SPY analysis here. I'm gonna go over the daily time frame. So what I'm trying to state here with the team is that we have a potential of a second establishment here, a new uptrend channel support here, establishing on the daily time frame. So this is the first touch, and this is the second touch of this support trend line. So we saw we had a significant rally from there, reclaiming over 65% of July's downside, and with buyers stepping in heavily to push the price back up, and now testing overhead resistance at 555. So if we're looking for upside continuation here, we need to be cautious, as we are also right at this resistance level here at 555 peak at the previous breakdown candle here on beginning of August. And so this could either, what I'm expecting here or what I'm anticipating here on the daily time frame is that we could either consolidate here pretty much create a base or zone consolidation with resistance at 555 and support at 542.46 area, and establish further higher low structure above this level at above 542. As long as we can continue to maintain structure above 542.46, and I think we could create a potential inverse head and shoulder pattern here. As Body already discussed, there is a potential inverse head and shoulder pattern if we see a rejection at 555.01, filling that gap right here at 545.39. And so if we establish a higher low structure right here at 542.46, we're looking for buyers to step in, create this higher low structure and confirm it. And before we pierce through 555 and test 558.80 area and 560, and potentially filling that gap at all-time highs, which is right around 565.10, I believe. But yeah, so I just wanted to show this a little bit of my analysis. I've been MIA for a few weeks now, but I'm looking forward to engage again with the team and be more active. And yeah, so I also wanted to also show this to the team. So this was the previous downtrend on July, end of July to October. Um, as you can see, it's kind of a similar setup as here as well. So if this is indeed a new lower trend line channel that we're establishing here on the daily time frame on SPY, then we have a whole upside to go through for the S&P 500 here towards 600 areas. But I don't want to predict, like I said, I don't want to predict the market, but as you can see, this is pretty much the same similar setup from here to here, and we are right above the 200 SMA line on the daily time frame as well. So yeah, the TTM squeeze here on the daily time frame as well. As you can see, we have transitioned into light green bars, and now we're slowly transitioning into solid green bars to fire this potential upside, further upside move. As Chef Mike mentioned, we do not want to be too bullish right here, especially that we're hitting a resistance level here on SPY. So what we can do is we can just stay on sidelines, wait for an opportunity, wait for a high-low structure around 546.36 or 542.46. Those are the levels that are marked as key levels for a higher low structure on the daily time frame. Now, if we go below 542.46, this means that we are going to be back below this, pretty much this downtrend line here on the daily time frame on SPY, which could pretty much give us or send us to test the 100 SMA line right around 530 point 30 area. And this is the key level that I'm also watching here for buyers to step in and potentially establish further higher low structure around this level right here. So yeah, that's what I'm watching for SPY as far as for this coming week. Like I said, just be cautious, and even if market does look strong right now, we are also hitting a major resistance level here at 555. So if we see a rejection going into Monday or Tuesday, let's say there's bad data or whatever news come in, if we see like a bearish engulfing candle engulfing this Friday session, that would indicate that this could be a potential reversal to starting trend to form that higher low structure for the bulls to build more structure to the upside move. But yeah, sorry team if I'm a bit nervous. It's been a while since I've been back here on live, but it's honestly good to be back. All right, so let me go over the stock on the watch list. Let me see. Uh, okay. So the stock on the watch list right now, I have sorry, let me just sorry, team, give me a quick moment. Okay, perfect. Sorry about that, team. Okay, so the next stock that I have on my watch list is gonna be it's more for shares and I'd say day trade idea. So this will be Root, which is currently, let me just go ahead here. All right, so currently Root is testing the bottom support level here right at 42.32 for the third time. And this level has acted as strong support zone, attracting buyers. And we formed a bullish engulfing candlestick here on the daily time frame, uh, which signal potential upward momentum. So we'll be looking for a follow through with an entry above 49.40 and our confirmation at 51.39. Um, Once this level I reclaim right here above 51.39, we're looking for test towards 50, this area right here at this breakdown candle at the 50 SMA line right around 56.90. And if we can reclaim above all moving average from there, we're looking towards 60.25 and towards this level right here at 67.11, which was the previous support, and this could turn into resistance level. But so far, that's what I'm watching for overhead upside targets for Root. So as long as this stays above 45 level, 45.12, this will be 45.12 is basically our stop loss. Um, so for risk management, we can consider a stop loss for, let's say, day trades. If we go on the 4-hour time frame, we go for an aggressive entry above 49.40 to 50. Um, then we can have an aggressive stop loss at 47. Below 47, we can get stopped out for our trade. Or if you want to do a swing trade for shares here, and if you're a long for ROOT, then we can set a stop loss below 45.12 for this stock, right below the bullish engulfing candle on the daily time frame. But yeah, so as you can see so far, every time it tests this level right here, the support level, this has been a very key major support level for buyers to step in. So this is the first, second, and now we're right at the third retest of the daily support, and we are printing a bullish engulfing candlestick as well, and we're almost taking out the supply candle right here that was placed on August 8th. So this is one of the stock that I'm watching as well. I have a much better analysis for you. I will be posting on the weekly watch list as well. And the contract that I'm looking at as far as for day trade is going to be the September one, the September 9, basically the 9/20 $60 call, which offers a more targeted approach to capitalize on potential short-term upside towards that $60 level. Um, but yeah, so if you're considering more long-term, once again, shares may be more a prudent choice here with that aggressive with that stop loss right there at 45.12. And the next setup also that I'm gonna, oh, I also want to mention the volume is it's slowly coming in, but the TTM squeeze, I'm liking the TTM squeeze transitioning here at the support level on the daily time frame. So we'll definitely keep an eye on this one for long term or some day trade for the coming week. Yeah. And let's see. The next one on the watch list is going to be SQ. And I see that Chef Mike also already he posted this setup here on the Teams Trade.id as well if you want to check it out. He had an amazing analysis there. So I'm going to go over mine here on the daily time frame. So SQ here is forming a bullish pennant on the daily time frame, which is basically a bullish continuation pattern. Closely monitoring the setup, I'm eyeing a potential entry in the 63 level, 63.86 level to 65 range, with our confirmation above 66.20, reclaiming above the 100 SMA line on the daily time frame. And our upside targets will be around this level right here at 69.53, and this peak right here right at 73 area. That's the major resistance level right here for SQ. But yeah, so I'm liking this one for long-term upside. And as you can see here, we have the TTM squeeze transitioning to solid green bars, and we're looking for a green bar to approach within the next coming days as well to fuel this move. So far, yeah, this one is going to be part of our swing trade, and the contract that I'm looking is going to be for leaps. It's going to be a bit expensive, but this is likely for anyone that has at least 10K or plus, or even probably 15K plus account. It's the 011626 100 call is the one that I'm watching, because I'm long-term bullish on SQ here. As you can see, Chef Mike actually he did cite down this potential inverse head and shoulder as well here on the weekly time frames. So this will be, I think, a good long-term trade here for SQ right above $60 level. And I'm also gonna, sorry, Roger, I'm just gonna go over a few more. I did pick up Goog as well, team. So Goog, I picked it up for us because I do see that we are right at this rising trend line support. We're right at this first, second, third, fourth, and then the fifth test here on the daily chart. And we have a smart money buy back test at the supply zone, I mean demand zone. So I'm honestly liking this one. Our confirmation will be at above at the break of 167, and once we break 167 level, we're anticipating further upside from here towards 175.73, and there's a lot of gaps right here, which is right around 183.44, and potentially going towards 200 here. We're also at the 200 daily SMA line as well. So this will be, honestly, I think this will be good to accumulate long term here for Goog. And let's see, the TTM squeeze also looks good here on the daily time frame. Just a few more here to fuel this potential upside move. And like I said, once we get above a candle close above 167 here, to even candle close above 167 to 169.11 above the 20 and the 100 SMA line, I think Goog can get a nice squeeze up towards this gap, overhead gap fill right here on the daily chart. So have Goog also in your watch list, and for long term, or if you're more of a share holder, you can also start picking up Goog here as well. I also want to show this on the 4-hour chart. So we have a nice potential let's see, ascending triangle here on the 4-hour time frame. So this will be, honestly, I think this will be good for some momentum up above 167. If we get below 161, then that could be a potential bearish flag, and that might not be. We might test 157 demand zone first before we head back up for a potential double bottom. But as far as for right now, I'm liking this setup for long term. We have a nice demand candle here placed on the 4-hour time frame. We just need that nice follow through above 167, whether on Monday or Tuesday. Yes, I'll be putting it on the weekly watch list as well, and I have the contracts already noted, everything in there as well. So let me see. And we also picked up Mara for long term. Let me just go over that as well. Okay, I'm gonna go. Okay, yeah, so Mara here, we finally filled this gap right here on earnings on 11/28. So I'm liking this setup on Mara. We have a nice bullish Marubozu candle here on the daily time frame. So as long as that candle does not get taken out here on the daily time frame, I'm looking for an upside move here on Mara. Our confirmation is going to be at the break of 17.75, reclaiming above the 20 SMA line on the daily. And once we reclaim above that, I'm looking into 20.50 area towards 22.74. 22.74, if we show further strength above that resistance level, then I'm looking into further testing this lower trend line here on the daily time frame, which is right around 23.88 to 24 area. And if we break this lower trend line on the daily time frame, I think Mara will have a nice move towards testing that $30 mark again, towards all-time high here at 34.60 area. The TTM squeeze also looks good here, and we have steady volume coming in the past two days, going into the weekend. So I'm watching Mara as well here for long term, whether you want to pick up the January 26th that we picked up, or if you want to pick up on shares, it's up to you. Okay, yeah, so that's pretty much all the analysis that I have today, team. If I see more setup throughout the week, I'll definitely start posting again on the weekly watch list or charts only. I'll post what I can find there throughout the week. But as far as right now, I'll give it to Roger. And yes, so
Thank you,
thank you,
Rain.
team.
Hey, welcome back, by the way.
You
Yeah,
too, Roger.
thank you.
Yeah.
Yeah, it's a little bit nervous, a little bit nerve-wracking in the beginning, but you'll get used to it. Like
Yeah, it's been a while, so likely I'm probably gonna start doing daily live as well. I'm gonna also
nice.
join Body into his live session, probably for a few hours, but at least there's something that we talk about with the team,
Really?
whether it's education or anything else. So yeah, we're really
Okay, then
dedicated
I'm
to
gonna
that.
jump in there then and listen.
Awesome. Yeah, we'd love to see you there and everyone else. So
Cool.
but yeah, go on, Roger.
Okay,
Thank you.
thank you.
Of
Thank you. Let me
course.
see if I can share my screen. Oh, not yet. Rain, can you make me a host, please?
Yeah, I'm working on it. Sorry,
Oh,
Roger.
oh,
Give
oh,
me a
no problem.
moment.
I have left. Oh, body crack. Oh, he's listening.
Okay.
All
You're
right.
good. Yeah, I think he's here.
Okay.
Thank you,
you.
Roger.
Hi,
Of course.
good evening, everyone. I've been listening the whole time, and it's been really interesting. Everything that their analysis is always really nice to hear, and to hear Rainbow back too. She has some great plays. I'm looking forward to playing some of them too. Thank you, thank you. Let me see, sharing my screen here. I'm gonna get straight to the nitty gritty. Thank you, sir. Chris, thank you. Thank you, Rain. Here we go. And I'm gonna put the chat next to it this time so I can see all the comments, because I did it before. Oh, I have what is this? Okay, so in the right, spy, change the settings. I do change every once in a while to different views, you know, just to see kind of like confirmations. Haikin Ashi, I like to change it every once in a while, and other candles like the regular color bars, just to see the opening and closing, and kind of get, you know, biased information for me to make you know, a guess of what can happen. Like for instance, you know, here we're looking at the S5. Actually, first I'm gonna start with the Q, because that's where Rimban mentioned that in regards to the three black cross on the weekly. Here it is. And so the reason why these are three black cross, and by the way, patterns are not 100% guaranteed, because if they were, then everything worked out, you know, perfectly. But here's the reason why they are, is because the definition of a three black cross is the top, which is all-time high, and then three down candles, full red candles, which this is what these are. So based on definition, that's what it is. Now you do want to use different other technical analysis in order for you to determine if that is going to be a false three black cross, you know, or a real one, meaning if it's going to go the 80% route where it almost always breaks down, or if it's going to continue higher. Because it's such a longer time frame, weekly is one of the longer time frames, it can take quite a while and play out in a whole different way than it usually would. But that's not including closing, meaning even if it breaks out really high, if it eventually pulls back strong enough where it closes way below where it reached, then that's still in play. So currently on the Qs, what we have on the Qs is that it's actually right at the highest resistance that I have that I had, or that I wanted to share, to be honest with you, because the highest will be the 485, but the 475 is definitely the highest resistance on the three black cross for the pattern to continue to play out. Let me pull this all the way up here to the threes, 475 right there, and it closed just there, you know, so it's still in play. It's still not a 100% safe play on the weekly, but now we're going to look at the lower time frame and find out where it's actually moving on a daily basis. Now we do see here a gap on the daily between the breakout of the pattern of the downtrend. So we can see here the downtrend, it was broken and it had to basically jump overnight of it, because first it was indecision, you know, and it was there, and the algos, the traders, and, you know, in general, people that followed the patterns, they knew it was there. It jumped overnight, it hopped, and then it stayed there, right? So what does this gap up mean? And do gap ups have to be filled all the time? That's the question, and that's the $1 million question. You know, there's answers for that, of course, but they're all based on opinion and, you know, with percentages of probabilities. A gap, when it comes to the location where it is now and what the pattern we're seeing and the confirmations or partial confirmations that we had, doesn't necessarily have to be filled. So it could continue higher. A gap up like this means mostly that there's confidence. Of course, volume has to continue to rise. You know, a small pullback before that can also, a small one again, could be okay. You know, or it could either be, if it's going to be a bigger pullback, it will have to drop below the force. I'm going to get to the lower time frame, so I'm not going to jump to that. But what I mean by the gap is that it does not have to be filled. It can continue higher into this consolidation area all the way to the 487, 485 area. Actually, more like 485, more like 485 area, 485.50 on the hourly, because on the 4-hour time frame is definitely on a squeeze. Short term, and it's still there. It already has established a trend. So we're going to be following the 10 as support on the 4-hour because by the way, when I mentioned last week, I was slightly bullish. It worked out well this time. With keeping in mind that we had those 3 black rows. So the way we wanted to play it was with adding insurance, which I did add, and I haven't shared plays yet. I'm still working on perfecting strategies that I want to work on, but I have shared it in other places, and I've been, on calls all the time. And our losing call obviously eventually picked up, as I mentioned last week. I was holding calls, and I ended up with close to 100% profit on those November QQ calls. But I had added to insurance, so that's the kicker too. Unfortunately, for me, which I always get insurance, but rarely I forget. I forgot to get it here. And this is where I got that play that lost, and then eventually I made money on that. But because I bought time, I didn't panic, and just from experience, I know that I don't have to panic, and I have enough time, even if it continued down. It didn't panic me. But anyways, if I would have got it here, it would have paid for itself. Currently, right now, I would have still been holding insurance, but I would have been at a profit for at least another 50% because of this down here, which would have been huge. And those ones that I alerted, by the way. So that's the kicker on this ones. But anyways, I just wanted to let you know that opinions are 1 in a million, and including mine, I want to tell you, is really out of almost dust, out of air, just based on, I guess, experience and things that you've seen and how you read the patterns. But don't take it as something that's strong to follow. You follow your own instinct, follow what you believe, look at your patterns, because these are probabilities of 60, 70%, and they could be wrong. So don't put everything in it and just follow a strategy. My strategy is always getting insurances for this down moves, where they can give you 4,000, 3,000, and with experience, by the way, not always, because most of the time you sell early, which is okay. At least that's what the insurance is for. And then it'll continue down, but at least you're practicing, you're learning and saving, and then that if you buy yourself enough time, then you can still get out of it. So the 4-hour, we've seen the full candles breakouts. So we're going to be holding the 474 as our support. And if it opens high and it drops, we're not going to panic until we see what happens around that area, at least for the beginning of the week, Monday or Tuesday. And remember, there's a lot of things coming out. So volatility is going to be, again, crazy, but momentum is really strong. And I don't mean this momentum. I mean momentum in general. Gravity pulls down, but gravity on the upside is the same as the bottom. And most of the best moves are the ones that are surrounded by a lot of fear and uncertainty. So that's the reason why I was slightly bullish. And currently, I believe that I have insurance. I'm still holding insurance I have even some for September, and then the end of August. Short-term ones because of the long-term ones, and I'm holding for the play that I sold for the profit. Had 2 on those, but I'm still thinking that it can push just because of the trend that has established on the 4-hour, and then the 2-hour. If you want to be following the 2-hour also. It kind of will match around the 474 candle. So you want to be looking for the first few hours of the day to see how it continues and maybe wait for the pullback. Patience will always pay off. And then, because the trend is established on the lower time frames. So, but the pullback can be sudden. And that's the reason why you're holding insurance, because the pullback can be sudden. And when the volatility gets crazy, those insurances can really save you from panicking. And when they're not, of course, you see money draining. But if you buy enough time, and eventually they pay. So that's how I'm looking at it currently. I think on the futures is opening a little green. I think I'm not sure. Let me check how high it is right now. Okay. Yeah. Oh yeah. It looks like it's moving. And and I'm holding Lotto. That I alerted to on a chat, a small chat that I've been part of way before. But I'm getting, I'm just warming up. Like I'm also coming back. Here it is. Yeah. Oh yeah. It was at 476. So we're at $1.50. So we want to probably open over our closing. That'd be nice. And that was, let's see, over our closing from over our high, I'm sorry, 476. We want to open over 476, and we are. And if we can hold that 476.50, hopefully by tomorrow. If we don't, we're still good. We're still potentially good because of the squeeze that can happen. But early in the morning, you just want to wait at least 15 minutes to see what the move is, and then maybe another 15 minutes, and then eventually you find yourself waiting an hour, which is nothing wrong with that. So some of the things you want to be looking for on the daily time frame are the right now we still have the negative crossover on the 50 and the 20, which is not good, meaning it's crossing like if we're trending down, we're still trending down. The good things that we're looking at currently are that we are crossed over already fully this last week on the 5 and 10. So that's going to be our support, which matches, with our 4 hour. If it continues to pull back down, then we're definitely going to see the 460, 465 if it pulls down below the 474 and then below the 20 on the 4 hour time frame. And then we continue to see the red candles piled up with moves up and then piled up and then move up and continuing down below that to the 5 on the daily, and then eventually probably the 20, because we're still trending down on the 20. We're still, just flattening out on the 50, and we need to make crossover with the 10 and 20 now here, and that can take several days. The volatility can get really high around here, this area, around the 460, 475 area, even 485 area. So we want to look out for that. I'm gonna go now to the SPY. Same, it looks similar, has 400 more stocks on SPY, SP 500, but it looks very similar. This gap up doesn't necessarily have to be filled at this time. If you research or if you Google gap ups trend, you'll notice, and the explanation will be basically that those are partially confirmations of traders or investors feeling confident, especially when there's so many different patterns that are indicating to the downside. So kind of like a contrarian style trading, and that's kind of how I do it. It doesn't always work out, but when it does, it's when you get your most wins. When you get the stock did move from, SPY has moved. QQs has moved like from 421 to 475, which was a $50 move in 1 week. And SPY from here 425, on 430 to 455 now, $20. So that's a confident move. Especially where it was, especially where the location of it and the patterns that are showing to the opposite side. So, that's what I mean. But it still doesn't mean, now the pullbacks can be buying, is what I'm saying too. So if you buy enough time and you don't want to play both sides at the same time as I do, because my style is more of a part-time style. I don't want to be stressing about looking at it all the time. I just kind of let it ride, and it almost always works out better when I just don't look at it and I wait. And all of a sudden when I think is all the time I should check it, it's doing either bad or good. Most of the time it's doing good, but when it's doing bad, it doesn't matter. I just check to see what happened, and okay, you buy enough time. November, as I said, expirations. I went from August expirations on my first few trades that I started, to September expirations, to the next ones. As I was winning, I was buying more time. I was still, and then by the November one is the one that I lost, the longer expiration one, and I didn't lose. It started going the wrong direction than what I thought. So I was wrong, which is why I believe the strategy is much more important than knowing where it's going to go. But if you do want to play only one direction, and we want to wait for the pullback, just buy time on the putts and don't panic. Wait, hours pass. If it happens that it moves before you wherever average down, and you just broke even, then you won. And if it happens to move before you thought and didn't give you a chance to average down, and that happens. Like for instance, on my place, I could have averaged down many times over, and I don't do that. I only did once. And if I would have, it would have been 300% win, but I don't dwell on that. I don't even think about that, because it doesn't matter, because that's not part of a strategy. That's not a strategy. A doubling and doubling down is not a strategy. That is a way of killing your account, and it eventually is guaranteed to happen. So, so that's why it's not a strategy. That's just what you do sometimes, and you really don't want to do almost ever, because you want to get used to not doing it. And if you do it once, then that's it. That's the time you do it once. And within time, you learn sometimes to do it twice, but I don't even want to talk about that, because that's something you don't want to think about. Okay, the SP has the 545 on the daily, and when it comes to the lower time frame, also has the same. It's almost the same analysis as the Qs on the SP on the momentum ones. So we want to be watching the 4 hour. Same thing on the breakouts, the full candles. We want to watch in the 10 basically on the 4 hour. To make sure that 4-hour candle. If you're in positions for short-term expirations, calls, you don't want to be holding below that. And it doesn't mean that it's going to continue down, but it's just going to mess with your value, the value on your option that you're playing. But the good thing that we're seeing on all of them is the crossovers on the 20 and the 50 on the 4-hour, and also which is right here, and also with the 200. So remember I told you last week, you want to have all the moving averages basically lined up, and that creates a squeeze to the upside. I mean, not only creates a squeeze, it means that we are going down the right direction. So pullbacks are really to be, even if volatility gets really high and the pullbacks are very, big, and you feel like, oh, the world is crumbling, you know that 546, which is $15 away from where you are now, of $10 away, that's a support, a strong support area, because that's where the 200 is, and it hasn't been pointing down. So it's flat, and it's being crossed over by lower time frame, which is a good sign. So the 20 is always going to be also a really strong support for any time frame, really, and it is as it is here for the 4. If it breaks at any time the 10. We have an established trend again, and we have a good crossover, and we are in the middle of a squeeze. So I feel, here's my opinion, and this is where take it as an opinion and mean nothing at all, But from what I'm looking at here, if I was to make an opinion on it, what I would like to play on the upside would be a squeeze to the up, looking at the 4-hour and the 2-hour. Anytime you have any profit and you're not experienced, you want to just secure that. You don't want to deal with, oh, it kept going and it's going to go so high. You won. There's going to be so many more opportunities. And don't forget to get insurance. Don't forget to get insurance, because that insurance can really pay. Stay around the 5-10% of your position on insurance. Try to make your calls. Buy yourself some time. 2 months, and you'll be surprised if you start looking at the Greeks how much, not that much difference is when you put it on your watch list. Put a 2 months expiration and a 4 months expiration, and put it on watch to see how much it loses and how much it makes. When it comes to losing, it loses a lot less than the shorter expiration. But when it comes to winning, yes, it wins a lot less, but it's still a lot more closer than the losing part. I don't know if that made any sense, but it's not the same when it comes to the downsides. What I mean, like my expiration, when it went down $30 and I didn't panic, $30 down, it lost 50%, a total, all the way down in 2 days. If it was any more short expiration than that, it would have been destroyed. So, and if the same move would have been to the upside, it would have been at 400 or 500%. So that's the value of holding something a little bit longer term instead of trying to squeeze that high delta on the shorter expiration ones. But if you can afford it, then go with the high delta on the longer expiration ones. So that's even better, Here we see the 200 flattening out. Kind of flattening out. So we want to be watching that for 546 on the 4-hour. But I think the 20 is going to be the strong support. As long as we stay over the 550, 250, I believe that we can continue higher on this spot. And I think currently we're opening. Not opening, but we're still on the 555 is where we're at. So we're not up too much. But if you do open red, then we want to wait to see what happens. You don't want to jump right into calls either. You want to wait a few minutes to see what the time frames are going to tell you. But I'm looking at the 2-hour and the 1-hour and the 4-hour, and they look like they're going to squeeze. Okay, let me look at Tesla. I also mentioned Tesla could have hit. It was a possibility for it to touch the 200 or 222, and it didn't reach that, but it did, break out over the 200. If it held the 200, which it did, I wasn't specific enough to mention the 197, which I was always looking at, but I don't remember mentioning it because that was a lower moving average. But that's where it hanged around for a few hours or a few days, even here on Monday, I think, and then Tuesday, Wednesday, Thursday, and Friday just broke over on the 4-hour, and currently has established a trend. And I think it's a 2-hour and maybe doing a squeeze too. So it has already established a trend. It's volatile like most other stocks, especially with the announcements coming in. So you want to secure any profit if you're going to be playing or stay out of it. Staying out of it is a win when it comes to it. But if you follow some alerts and you make some money, especially if you're part-time, you want to secure it. We still have the 200 on the way down on the lower time frames, but we do see a trend established. So as long as we touch that 222 and try to move over that, even if we bounce down or pull back, we want to be watching on the 2 hour, the 10, and on the 4 hour also the 10 and the 20. So to not panic. I think that if it pulls back really strong, but we hold the 200, maybe 205, and then bounce really fast, we can continue still higher. That'll just be like a algo or reflex pullback, just like the market does all the time, at all times, just to shake the tree, shake some of the fruit down and make you sell your short-term expirations, and especially with the day traders. But it's a scalper's paradise, I'll tell you that. And I'm not a scalper. Yet to hourly also has a time frame been flagging the whole time. 210 on the hourly is what we want to be watching, or 50% retracement on this, which already did. See how we have this one never retraced. It retraced after hours with almost the 50%, maybe around 35, 40. And then this one, 1 hour time frame, 30-minute retrace, pull back, reject a little bit, now still hanging around there. So the lowest we want to go is the 210 on the hourly, and then bounce really fast, or else we will continue. By the way, once it touches a little bit below the support, let's say it touches a little bit above the support or a little bit below, it's usually not 100%, but usually I would say 60% or 70% of the time continues that direction after a pullback. So it will actually break it. Usually, not always though. So you want to wait for that to see what happens. And then on the weekly, still, as I mentioned last time, this pattern has been here for years. This pattern that I've created, and it's supposed to be on the weekly. And currently it bounced off of that pattern correctly here, and then it's now there. But what I'm looking here is that the 200 still hasn't lost the trend up, still moving higher. It's kind of flattening a little bit, so at least we gotta touch that to see what what it has to say. It has the same pattern in tech as the 3 black cross, with the breakout of the bullish weekly, but yet the 3 cross and then the breakdown kind of falls. I think Body and Ray Bond both were saying that, well, I may be wrong, but from what I understood, this is kind of like a fake out or shake out. This could be that now we're going to continue on our uptrend. I just want to have the confirmation that pattern is not going to play out, because it is a weekly, and that those weekly can take quite a while to play out. It's not going to play out in 1 or 2 weeks or 3 weeks or 4 even. I think it's going to play out in at least 6 to 9 weeks. So we gotta always keep the insurance ready. I'm the old man telling you to don't forget to buy your insurance. By the way, I'm reading the comments, so if you wanna ask for anything in regards to stocks that you want me to see, because I'm gonna take a look at all the major ones, of course. I'm gonna look at Mara now, which Ray Bond already did, and I think she has a position on. So actually, let me look at Riot, since you looked at that already. She has a position on that. Riot. Okay. Let's see. I think the shorter time frame might be better looking, because currently it looks like it needs to consolidate between like 7. Oh wait, is it up? Is it up after hours? Oh. Okay, 8. All right. I mean, the 200 is so far on the lower time frame that I think it needs to touch it. So we can expect a move of $1 to $2 in the next few days, weeks, at any moment. Yeah. So the lower time, really low time frame, maybe probably the hour looks. So it's just consolidating, this area, the demand area right here, consolidating and getting ready to push probably to the 850 and then to the 950 or even the 10. But we're still not out of it. So we gotta wait a little bit, but it has established already a trend. Yeah, higher highs, here's the higher high, then the higher high right here. And the establish, so it's starting to squeeze a little bit. So there's potential. You already know how I feel on the higher time frame. Bullish. Goodbye. So yeah, I think I'm gonna be looking. Mara usually doesn't make as big of a move. I'm sorry, Riot as Mara does. So yeah, you got it, right? Or he knew. But maybe looking something position along leap into that one too. The big moves are gonna pay, you know, and the small moves, the time that it will take is it's not gonna affect too much, I think. Apple, look at Apple, because I also said last week, I remember mentioning that Apple could be the reason why I'm not too bearish, and the only reason why I think the Qs is heavily weighted there. And even SPY can break out and be, you know, bullish this week. And here we have it crossed over the 20 already on the daily, and that's around the 215, 216. And we have the 50. As long as this don't cross over, I think this is going to be an area of interest, the 210, between the 215 and the 222, because it did cross over the 222. So right now we have the support of the 222. Short term will be probably 224.50, so more of the 4 hour. You can see. So as long as we stay over the 424.50 on the hourly time frames, I think we're okay to continue higher on a squeeze and then pull back. So and then have a small pullback. But I think this, I also think that we can be more bullish, biased slightly. At least I am, and that's strictly my opinion only. And like I said, I can be completely wrong, so don't forget that, please. 35. So if we're able to somehow hold over the 229, I think we can hit the 235. So that's a good $5 move. Not a big move for Apple as far as options, but I think that could be a good move. Or if we reject that, you can also hold maybe you know, pots here, or buy insurance maybe here too. It continues higher to the 429 around there, buy the insurance or sell your calls, take profit, and then wait for that 5 pullback again, maybe another $3 down, and then continuation. It has established a trend, I think, on the 4 hour, a trend line. So also you could also want it to be followed that, or you could just follow that, the 50. Here the 50, see the 50 will be the 223. This is Apple. So, and it has crossed over with the 200 to 50, 200. That's a golden cross. So if it was to somehow break this, it'll just be retesting this, you know, around the 217. That's what it will be doing on the hourly, which will definitely match with the 2 hour also. That's around where 200 is. The 50 is about to cross the 200. We would like that. That will give us a few more days of bullish moves, even with pullbacks, because we have established a trend. So we want to see the 50 and the 200, you know, golden cross in the lower time frame. And then eventually we want to see the 50 and the 200 in the next few days to cross over to. All right. I don't want to keep. Oh, I got 10 more minutes. 10 more minutes. Let's see. What else can we look at? SPY, Riot, Apple. Oh, here we looked at this SMCI. Yeah, obviously bullish too on that one too. Definitely has trend established on the hourly time frames. But potentially in a squeeze. You know what? I'm just gonna confirm if there is a squeeze on this. Yeah, so it is a squeezing. We can confirm it on a different display. Heikin Ashi. You can see here that we have we're over 70. So as long as we can continue to hold the 10, this thing is gonna continue to the 735 next few days. We still need to, we have a crossover on the 20, crossover on the 20, crossing over the 50, flattening on the 50. We need to touch the 750 at some point. It can take, volatility can be really high, so these things can move. All right. 678 is a resistance. So yeah, I agree with everything. AMD, I haven't looked at AMD forever. Any requests? The request. AMD, all right. AMD crossing the ABT, all right. We got a request here. We got one. We got a live one. ABT. Don't be a penny stock. Just kidding. All right. All right. Oh yeah, of course. I should have got. There you go. Hello, Meta, Microsoft. Okay, here we go. 200. Oh, nice. This is nice. I like it. Not yet completely though, but I like it what I'm looking at. So yeah, so we see the trend, obviously. Look at our eyes, look at our moving averages, look at our trend getting established, not strong enough yet. Our size moving higher. We are here. If we are playing longer, 3, 4, 6 months, we don't have to be worrying about these pullbacks yet here on this. It's moving higher. Let me look at the weeklies. Breakout on the weekly, beautiful, beautiful candle right here, bullish candle. Now this is not a guarantee, right here. A lot of times these are really good fake outs, but we want a 50% retracement, the location where it is. It's literally squeezing on the weekly, on the 200 and everything else. Like it's everybody against the 200 right now. And it's looking good for the 200, like it's going to break over because everything is divergent to the upside too. So I think with time, you're going to see a lot of big moves here. I don't think you're going to miss anything even on the big moves because once they keep going, they'll keep going enough where you can make some money, 20, 30%, 40%. You don't have to hit those 300, 500 like everybody says. If you like, you can, but no need for them. But it's looking good on this one. Let me look at the higher time. This is the first time I'm looking at it, by the way. I've never seen it. I'm buying. I don't look at charts that much anymore. Let me see. So here we have the monthly. Also squeezing. It's in a very squeezable location. See, yeah, so just I would say how's it doing after hours? But if it opens over the 110, I mean we have a crossover on the 50 and the 20. If it opens over the 110, it can continue higher. If not, it can just have a small pullback, and it should continue also higher. Again, these are opinionated. These are really opinionated opinions. Like just don't no guarantees whatsoever. It'll be completely wrong. But yeah, it looks pretty good to me. Let me look at Microsoft. Look at everything else in the 200. Okay, so this one I have to look at the lower time frame. Yeah, so we're still definitely on a downtrend on this. We are gonna be currently just a reflex squeeze, breaking out of this pattern. We're not out of anything whatsoever. Even up to here to the 435, it could definitely still pull back very strong. But let me see if it's even gonna make it to the 435. It has potential to make it to the 435. It has potential to make it there as long as it hold. Currently, right now, it needs to hold the 418. You're welcome, Brett. But you can see here the flattening of the 50 already with the crossover of the 20. So if anything, it will just retest this around the 410. If anything, and I think its purpose is to touch the 200 also 435. But I will wait. Always when you're patient, the market is always going to pay. I assure you of that. Even when you miss it, when you miss it and you're like, it's okay. It'll give you another opportunity if you take it like that. If you're like, then it's going to affect your mood and, I don't know, but it hasn't worked out well for me. So if you just take it patient and you miss a move, you miss the move. If not, you wait. And sometimes when it looks really, let me tell you something. When it looks really, really good, it usually doesn't work. So don't fall for that. It's perfect. That's the reason why most traders feel like every time I pick something and goes the opposite direction, it's because the market knows. It knows you. The algos know you. No. What I mean is, it knows it's human reaction. So you and everyone else is doing the same thing. So the small percentage that is not is the one that are winning at that moment. That's why I like the contrarian point of view of things, as long as you match it with other things. So on Microsoft, it has potential to squeeze. If not below the 417, it can pull back to the 410. Want to keep watching for it to not take over this breakout 4-hour here. So that's why the 410 is really important for it to bounce back really fast, because it still hasn't established a strong trend on any higher time frame except for 2 and lower, which is not nothing good to be looking at. Hourly is another really big one that traders look, and you can see here flattening out already in the 200. So again, 410 is where you want to be keeping your eye on a pullback. See how it reacts there with another 2, 3, 4 hours down the line, and see how those 1-hour candles are looking, to see if we are going to actually look at the touch the 435, which I think there's a good chance it could. But this, remember these patterns right here are like roller coasters, Sometimes really, and that's why I like the contrarian. They go to the upside. They just fly, like what? But very good possibility can you just do a reset and then continue, like just drop down. Let me see in the higher time frames. Yeah, so I think the 435 has to be touched at one point over the 410. Over the 410, the 435 would probably be a good target. This is an area of consolidation and reaction of traders. Right now, still bearish. Meta. You're welcome. Meta. I'm doing the body. All right. Not the. See this. Here, Meta. Let's take all of this out. This is old stuff. So currently, we tested and we broke, and over the 20. It really never lost the trend. So we're still on the trend on this uptrend. So we can't treat this like it's gonna pull back yet. Even on this peak right here. Go down yet. Lower. Oh wait. Oh wait, take that back. Okay, let me see. Rewind. Okay, I haven't I haven't contradicted myself this fast for a while. I haven't looked at Meta for a long time either. I haven't looked at it. I don't remember if I looked at it last week. Honestly, I don't remember. But so it looks like it reached the top. It was going up. There's a good possibility. Yeah, I will give it a good chance for this to give us a pullback below the 523. I think this is probably where that pullback is going to come on the Qs, on tech. Except for Apple is the only one that's just. That's the reason why I don't think it's going to dive. I think it's going to pull back, but not completely dive. So this is looking like it's already reversing. I think one more breakdown below the 525, and then volatility, then it'll continue down and then pull back up to the 425 and over. I think that's a confirmation that it's going to continue lower to the 500. That 500 looks like a spot, in my opinion. Big, bad opinion. We have support at the 510. I don't think it's going to be that strong yet, because just because of the momentum. But we do have a crossover on the 4-hour on the 250. So even if we hit the 500, even if we get the 500, 510, I think that could be an opportunity to wait and see what the hourly time frames do from there. Because if we have a few 2, 3, 4 hours down and good reaction, then we wait for a small pullback and then we continue on the 4 hour, because that means that if we have 2 or 3 2 hours, that means that the 4 hour close nice, and then we just need a couple of 2 hour time frames pull back and continue higher. So I think the 500 is really likely first, and then continuation just based, and then continuation. Wait a minute. And then continuation just based on the higher time frames. That's why. So the lower time frames, they look scary, but we already have the higher time frames confirming kind of like there's demand there, and bulls are stepping in. So I would say pullback first and continuation. Let me see a berry. All right. And by the way, these analyses are strictly just technical. This is what I'm looking at the candles, because I don't know much about these companies or anything actually. 200, 500 crossed over. Nice. That's a golden cross. By itself is good, but it needs other stuff to confirm. Looking at higher time frames. Yeah, this pattern is this pattern. You see it a lot, like where it consolidates, drops really hard, goes back, and then consolidates. A lot of times they're just flat. Tesla just had it, they usually break out. Usually. So it's a bullish pattern, 70%, I believe, around there, 65%, 70% area of breakouts to the upside. A lot of times they form head and shoulders. I mean, yeah, inverted head and shoulders. So, but they don't look like nice inverted head and shoulders. They look more like consolidations, breakdowns, like that. So the only thing, is that this stock has a lot of nice things to look at technically, but it hasn't established a trend. So I wouldn't go completely long on this yet, because it hasn't established a strong trend. But it has potential, definitely. You can see here the volatility. Look at the candles. They're big. When it makes a move, it makes them big, but yet still stays in the same location. So, the candles are big, but, it's almost like a secure profit candles, and then wait to see what happens. See if it's going to continue higher or not. I would say the 60 to 61 will be the area of concern if you're holding anything really long, not 3 weeks, 3 months, 2 months, cost like that. That's where you want to be paying attention at, or 50% retracement of the candle here, right? Monthly or even weekly, because it's pretty big here. So the lowest you want to be is around here, 60. Based on these candles that I'm looking at, it likes to touch it on the lower time, just react like that, because the candles, don't close. They have big tails. See, here it is. They have big tails, so it likes to have high volatility, move higher. So I think there's good potential to make money here several times if you secure profit and just keep playing it like that. But don't overplay, always don't be greedy. But it looks good. It looks good short term with no confirmation on the higher time frames yet. That'll come eventually. If not look at the really low time frames. Hourly. Yeah, so the 63.50 in the lower time frames is the thing to watch on the hourly, 4 hours. 64.50, 62.50, 64. Around there, don't worry when it makes those big moves yet. Wait till they close. It looks good though. I like it. Right. Look at these candles though. Just imagine these moves. They're really scary sometimes. Literally holding on the opposite direction. IFF. Ours. Nice flag. Consolidation. Established somewhat of a trend, very weak. Actually, it has a good trend on the weekly. So I would say the 93 is 93.50 is a good support for the weekly. If it's volatile, it's gonna make big moves. But as long as it holds that, and you see reaction on the hourly and the on 93, if you have those scary pullbacks, I think you can continue. Even if we have this negative crossover here on the MAC, we have a pretty good trend. We just need to show, maybe touch this, pull back a little bit, and then continue over the 200. This is the 200. We have a crossover on the 20 and the 50. Good sign. And we just want to keep going here so we can cross over the next few days, October, September, like this. Unless there's announcement. That's why I mean that this is just technical, because if there's announcement or earnings or volatility, then it's gonna move, higher really fast, and then pull back and then continue. So you can see the 200 on the daily. 50. Yeah, we definitely want to need to hold this, because or else we have a big gap here. It's always stayed above, but right now it's in a squeeze area. I think that it can squeeze to either direction here. But I think even if it pulls back and the weekly has a pretty decent trend, as long as it's a fast move and it continues, in a fast move, I mean a few days, because we're looking at the weekly on the trend wise. Right now daily, but on the weekly and the trend wise. So as long as, even if it pulls back really far, as long as it closes on the weekly higher, then it should still be okay. $93.50, I think I mentioned. Yeah, $93.50 is the area to look at. And here's the 200 on the monthly, which is the breakout. The support right now too, actually, is around the same thing, $93.50 on the monthly. So everything's converging. Usually that's what happens. 110, it will be the resistance and the target, since it has momentum and it's moving higher and higher. Good trend, decent trend on the 4-hour, and good on the 2 and the 1. So it has a good chance of continuing. Give it a good probability. Watch your 97 and watch your 93 if it breaks below that. That's it. All righty, you got it, Brett. You got it, Lisa. All right, it's time's up. So it was great. Thank you, everybody that's left over here. We'll see you on the live trading or next week. All right. Have a great night and enjoy the time with your family, because I do.